So, good evening, everybody, and welcome to this webinar focused on the fallen angel strategy. Really happy to have you guys here and invite you to ask questions along the way. I'll do my best to take your questions as they come. Really, the intent of this strategy is to go over a high level approach to the markets and how you can trade the so called fallen angel strategy. As always, we need to let you know this is for information and educational purposes and is proprietary to Trading Terminal and its website. The data for tonight is broken up into 5 distinct steps. I'm going to talk to you about this strategy in 5 steps that are going to start with the trade overview. What is the fallen angel strategy? We're then going to go into the conditions behind the strategy, right? What are the setup conditions that you need to see? Then how do you set up the trade and get ready for the potential opportunity to trade it? What does the trade entry look like? And last but not least, how do you manage the trade once you're into it? We'll go through this in a stepwise fashion. Like I mentioned, if you've got questions, jump right in there. I'll do my best to pick them up. Let's start with the trade overview. The fallen angel strategy is actually part of a series of 4 strategies that are very similar but have slightly different configuration options. The fallen angel and rising devil are the most popular ones. They're the ones I trade most often. And being that I'm short biased, I tend to trade the rising devil. That's a short trade. The Rising Devil and Lead Balloon are both short trades. Fallen Angel and Phoenix are both long trades. But most people like to trade long. So we're going to focus on the Fallen Angel. And I'm going to explain what that means. Now, most trade names, it's just a name, right? This strategy has lots of different versions out there in the world that you can find, usually with slightly different configuration options or ways people have put it together for themselves. I'm going to explain to you what it means to me and how you can trade it. Now, specifically, the Fallen Angel strategy sort of has these items. It is a long trend continuation strategy. So we're looking for something that is already heading in a direction, and we want to figure out a good entry point so that we can get on board and have it continue. We're looking for strong stocks that are moving higher on positive news pre-market. So this is an early trade. This is going to happen right at the beginning of the day. We're also looking for stocks that are going to be sitting above the VWAP. Now, a few times in this webinar, I'm going to be using terminology that you may or may not be familiar with. I'll do my best to explain them, but if I miss one and there's something you want to explain, do not be shy in jumping in and asking, okay? VWAP stands for Volume Weighted Average Price, and it's a very common sort of average, a moving average that people use to measure sort of price performance over the course of a day. I use it quite heavily, and it's one I like because it helps me understand, is the price sort of moving higher or moving lower? That VWAP is usually sort of your net zero line. When something is at or just trending around the VWAP, you know that mostly it's not going anywhere. It's basically at its average price for the day. Hence the name, right? If it's above it, it's above the average price. If it's moving below, then it's below. So you know, and on the Fallen Angel strategy, I'm looking for something that's sitting above that average price. I want to see a rising price in the early stages. We're going to take this trade within the first 1 to 5 candles of the open. Now, I've worded it that way, 1 to 5 candles, because that implies you can trade this in multiple time frames. You could trade this using a 1, 2, or 5-minute chart. You really cannot trade this strategy with a higher level chart because now you're getting into longer time periods that have bigger builds, and you should be looking for slightly different criteria. Now, I say 1 to 5 candles, and I would say it's a little variable. I'm going to touch on this a little bit later. It could be up to 5 candles if you're using a 1-minute chart, maybe 4 candles if you're using a 2-minute chart, and 3 or so if you're using a 5-minute chart. Because, of course, the actual elapsed time increases, right, with that chart. You know, 3 candles on a 5-minute chart, you're looking at 15 minutes of elapsed time. After that point, this strategy sort of loses its effectiveness, and now you're moving into other types of strategy definitions. What differentiates, one thing that you should pay attention to in this chart are the green words. Those that are in green are the things that differentiate the fallen angel from those other three strategies I mentioned. So if I look at the different criteria on all four of them, you can see I've sort of given you an idea of what they look like, right? The fallen angel is long based. It's a stock that's moving higher on positive news that is above the VWAP. As opposed to the rising devil, for example, which is a short-based trade that's moving lower on negative news below the VWAP. And then you can see the Phoenix and the lead balloon described trades here. Those are the criteria that I look for. You could trade all four of these strategies using the information I'm going to provide you in this webinar because basically the trade setup, the trade entry, and trade management elements of what I'm going to talk to you about are otherwise the same if you just sort of replace the long with short, right, the green with the red, as applicable in each strategy. We are going to focus, however, just on the fallen angel today. I'm going to explain that in detail and give you what you need to know if you want to try and trade it, okay? All right, so let's move to step 2. We need to understand the conditions under which you would identify a stock to trade this. Well, like I mentioned, this trade happens right at the beginning of the day. Overall, I'd be looking for a stock that has to have these criteria. First, I'd be looking for a stock with a float of over 50 million shares. What is the float? That's the total number of shares available for trade. Anything lower than 50 million, you tend to get less predictable on the strategy, and they tend to get, you may have heard people talk about low float stocks. Those are often ones that have less than 20 million shares. 20 to 50 is sort of a gray zone, and over 50 you tend to get larger stocks that trade a little, frankly, less crazy, right? A little more mature fashion. I like to focus on the ones that have over 50 million shares. However, you can certainly trade this on smaller stocks. Just know those low floats can be less predictable. They're higher risk. All right, second criteria. I'm looking for a stock that trades more than 5 million shares per day. That just shows me that there's volume in the stock, and I know I can count on regular volume being available for my trade, so that it can be filled, whether I'm going short or going long. I'm looking for an ATR of over $1.50. Now, the ATR stands for average true range. This is an indicator of how far a stock moves on an average day. Now, I'm expecting the stocks that I'm looking at to be in play. Remember I said it has to have news? Well, I'm looking for one with news. Therefore, it should be trading more than $1.50 on this given day, or I wouldn't be looking at it. But I want to know that it has enough range that I can make money off of it, right? That it's going to move sufficiently for it to make it worthwhile me spending my time paying attention to it. Okay? So, and I see your question. You got it exactly correct. So, Shay, you're asking what is the best place to get the news? Now, I'm a little biased on that. I would argue the best place to get the news is Trading Terminal. That's usually where I go. And I'll show you. I'll sort of show you what that looks like and how you can get the news. I do have an example that we're going to go through. And you can get all of this information, by the way, from Trading Terminal. There are, of course, other news sources that you can get it from as well. All right. I'm looking for stocks that have a share price of over $10. Again, for me, that just allows me to get my risk to reward in line. And, under $10, once again, sort of like a low float, they tend to trade differently. There's not as many institutional buyers in there, and they just become a little more erratic, in my opinion. So that's why I look for stocks with a share price of over $10. The last thing I have on here is that I'm looking for a short float of less than 20%. Now, the significance of that is on a fallen angel strategy, right? I'm looking for this to go long. It's one that's moving up on good news. I'm looking at it to continue going long or north. And I don't want a heavy short float. Why? Well, if you had a really, really big short float, you could get a short squeeze out of it, which means that, if it's moving higher, people could have to close their shorts, and that would actually cause it to move higher. But what sort of like the share price and the float, it can create erratic behavior because don't forget, the people that are short have a vested interest in this thing going down. And unless they're severely overpowered by the stock movement, they're going to try and push it down, right? Especially if there's a lot of deep pockets who are trying to make it move that way. So if I'm looking for a fallen angel strategy, I do not want to see a big short float just because it introduces risk. While it could support my trade, I don't like the risk parameter to it. Once again, Tony, you can check the short float on a trading terminal. And why don't we do that? Since you guys are asking the question, if you just go to the main page on Trading Terminal, this is what main page would look like. You can just type a ticker in here. I was looking up some earlier. Let's take a look at Oracle. And as you guys can see right here, it's got the market cap, the float, right? So 1.6 billion shares, so well over the 50 million, nothing to worry about there. Right up here, it's got the ATR, average true range. You can see that's $14.48 on this stock. And down here, we've got the short float, which is only 1%. Typically, it's pretty low like that. It's only 1%, it's even 0.5%. Like if we were to call up something like Apple, the short float on Apple, I think, is probably about 0.5%. No, 0.75%. So it's pretty low on the major stocks. But when you get into smaller things, like there was a stock that we were looking at today that was moving heavily called Prax. It's got a bigger short float that's got 16.8%. And as you can see, the total shares is only 15.6 million. So, that would one that doesn't quite meet my criteria, although I mentioned it as a potential option only because it happened today for a rising devil. But anyways, that's where you can find the information. Some of the other stuff that you might want to look at, it's down here under the price highlights section, right? You can see the opening price. You can see, so notice it's got the volume weighted moving average. This is sort of the VWAP stuff that I was talking about. I'll show it to you on a chart later, so don't worry about that too much, okay? The other thing that I mentioned was the average volume, how I said I want more than 5 million shares a day. So if we're looking at something like, again, this Prax, notice the average trading volume here is only 466,000. Again, going back to something like Oracle, its average volume is 20 million shares a day, right? So again, these are all just indicators that I use to make sure I'm getting stocks that have the ability to move, but enough stability that I'm not likely to increase my risk more than I'm comfortable with. So back to the presentation. So those are the overall conditions, right, that the stock can have. And you can look that stuff up at any time. Some people like to start really early in the morning, whether you're doing that at 7 a.m. or 8 a.m. or 8:30, I don't care when. But you can filter some of your stocks that you may be looking at based on that information. Now, by 9:15, here's the specific criteria I want to see on the day. Like I mentioned, I need positive news. I want the news to know there's some driver. There's a catalyst for this stock moving higher. I want it to be gapping higher on that news. When I say gapping, we usually mean basically it's the differential in price between where it closed at 4 o'clock the previous trading day compared to wherever the price is at the time at which you're looking at it. In this case, I'm suggesting it's around 9:15. So often we look at stocks in the morning. If you follow the pre-market show that we have with Carlos and I, for example, we look at gappers. They're moving more than 2% higher from the previous close. I want it to be gapping at least 2%, although the number isn't important as long as it's higher than it closed yesterday. That's what's important to me when I'm looking at the Fallen Angel strategy. I also want to see that there's been at least 500,000 or 500,000 shares traded by 9:15. The more the better. But if there's less than 500,000 shares, that tells me there might not be a lot of enthusiasm for this move. The news might not be strong enough to really drive the type of activity that I'm looking for. And I typically would avoid a trade if it's got less than 500,000 shares traded. I'm also looking for a stock that is showing consistent price action, and by that I mean it's got regular trading volume when you look at a 5-minute chart, again, pre-market. This is also important because when you look at charts pre-market, sometimes you see these big gaps, right? If there was 500,000 shares, but almost all of them traded in a 15-minute block between 6:45 and 7 a.m., Well, that's not very good, right? Because that was like 2 hours, 2.5 hours before the market opened. And it could be that this thing is not going to move when the opening bell rings. I want to know there's consistent price action. That volume is showing me candles in every minute. There's shares traded every minute, or at least every 5 minutes pre-market. That gives me confidence that this trade, again, has some of the criteria that I'm looking for. Last but not least, I want the price to be above the pre-market VWAP. Now, I say that because VWAP traditionally is a measure that is used only after the market open. However, nowadays, people use it all sorts of times, intraday, on different scenarios, and of course pre-market. So the VWAP will be available on any platform that you're using. You can see it pre-market, and it's usually good for the fallen angel that it's above the VWAP. If you remember, there's 4 different criteria where I could have something that is trading below the VWAP with strong news, right, that I might want to look at for a gainer. And we've seen a lot of those recently, by the way, right? Because the market's been gapping down and then it jumps up pre-market. That would be a Phoenix type trade. But we're talking about a fallen angel, so I want it gapping above the VWAP pre-market. Okay? So those are the background conditions. That's step 2. Step 3, let's look at the actual trade setup. What am I looking for? Between 9:25 and 9:28, right? So these are just the few minutes right before the open. The stock must have target profit levels above the current price. Now, again, I'm going to show you on a chart what I mean, but really, I want to know how far can it move? If I think this thing is going to go higher, where's it going to go to? How far is it going to go, right? You must be able to identify them. If you can't identify those levels, you might want to consider not taking the trade. Now, there's a couple of exceptions to that. For example, if you've got a stock that's at all-time highs, well, you don't have any levels, right? It's never been here before. So what do? In those cases, you usually use whole dollar numbers, right? You go to the whole dollars. Those are usually good targets because stocks love to move to and through whole dollars, okay? Second, I do not want to have significant support or resistance levels in the active price range. So what does that mean? That means, if I'm looking at this thing to move higher, I don't want it to be all congested with areas where a ton of trades, a ton of shares have traded hands many times, and it's created levels. Now, the levels depend on you and your trading, right? Do you use Camarilla pivot points? Do you use regular pivot points? Do you use moving averages? Do you set daily levels? Again, I'll go through and I'll show you sort of the type of levels I look for. But if you have levels that you rely on and they're all within the price action pre-market and all over the area where you think it might trade through, it's likely to have more difficulty moving higher like we want this stock to do. So I would probably abort. By the way, any of these criteria I'm telling you about, if they don't occur, generally, I say, not this stock, not this day, right? So these, when I say the stock must, to me, these are criteria that have to be there. If any one of these conditions fail, I don't take the trade. So you may understand, I don't take all that many of these, right? This is a strategy that works very well when you identify it, but you can't force the rules. Either the rules are present and you have an opportunity to trade, or they do not present themselves and you abort. No trade. Okay? Let's go back to the criteria. Next one. The stock must be able to deliver a minimum of a 2-to-1 win-loss ratio. What do I mean by that? Well, specifically, those levels we just talked about? Between the place at which I think I could probably get an entry and the price target, I want to know that it's got twice the range between those two levels as it does between where I think the entry will be and where I would likely put my stop loss. Now, again, I can't tell you exactly what that looks like in every stock because it depends on the situation. But this brings us to our next points, right? Which I need to find out where to put a stop loss. So, the other setup criteria that I'd be looking for by basically the time at which you want to have executed the trade. And I say 9:35 because some of this could happen pre-market or it could happen in the opening minutes of the market, right? But if it goes past 9:35, remember I told you my 1 minute criteria is, sorry, if you're trading off a 1 minute chart, you can trade it for roughly the first 5 time periods, which actually gets you from 9:30 to 9:34, right? If you really count it, because, 9:30 is a minute, 1, 2, 3, 4. Anyways, there's your first 5 time periods. But so if it hasn't done these things by 9:35, it's an abort on the trade. But again, it's not a bad thing if it happens earlier, like 9:25, 9:28, 9:29, that's okay. I just want to see it happen within the opening minutes, okay, of the stock, of the trading day. Okay, so first item I'm looking for, the pullback to the VWAP and or a significant level. This is important. For this strategy to work, right, I need it to pull back a little bit. Remember, it's gapping higher, it's moving higher on good news, but I want a little bit of a pullback. Why? Because that gives me a good risk to reward. That gives me a good entry point at which I have a greater probability of success. I'm not chasing it higher. I'm not risking entering at the high of day and having it go higher. There are great trade strategies where you can trade something at the high of day and look for it to go higher. That's not this strategy, right? Don't confuse them. If you want to trade a high of day break strategy, right, that's great. Don't confuse it with this specific strategy. That's not what I'm looking for in this case. I'm looking for a pullback that I can take advantage of and then a trade to move higher. Okay? Second item under this section, I'm looking to show support at or near the support level with a strong order book. This specifically means that once it gets to the level I've identified for the low, right, where that pullback goes to, I want it to halt. It doesn't have to halt for a long period of time. It could literally be seconds. But I want to know that it's reversing, that I'm also seeing stuff on the ask, right? Meaning higher orders. You can use a level 2 bid and ask. You look at the ask side, where are the big orders? Hopefully there's more there than there are in the bid. Or you could use a visualization tool like our Atlas tool that you've got in Trading Terminal to see where the volume sits. Ideally, you want it above the price that the stock is currently trading at. Okay, now Anthony's asking a good question. Do you use a screener for these criteria? You can. The more criteria you try and put into a screener, the more complex that screener needs to be, right? I generally don't. I do to identify the gappers, right? I have a gapping criteria I use in the Trading Terminal scanners that allows me to identify things that are moving on the day. But a lot of the criteria I go and I look up myself. I look up manually, I make sure it's in place. Because it gets me familiar with the stock and what's happening. It gives me an opportunity to sort of just take a look at it, get a feel for what's going on. But two, I feel that it just gives me that comfort that I've done my due diligence, right? I'm not just trusting the tool to have done the filtering. I've looked it up for myself. I've checked the boxes. And maybe that's just my bias, but that's how I do it. All right, back to the data. Next point, I want to start the move higher. I want to start the move higher above the identified support level. So this means, again, it shouldn't still be dropping when you're entering this thing. This is a long trade. It should have been moving long. It pulled back, yes, but now I want to see it start to go back in the direction of the trade. It's just a short-term pullback. Sounds probably similar if you're familiar with an ABCD type trade, right? Where you're looking for that pullback and then a move higher. A lot of the same principles apply. This is just a very specific criteria to trade at the open. And I'm looking for it ideally to still be above the VWAP or have regained the VWAP at the point at which I take the trade. Meaning I want it to be above that average price that shows me their strength and it has an indication that it's interested to go higher. Okay? All right, so that's the third step. That's all the setup criteria. And there was a lot in there, right? But that's the stuff I look for. It's not as complicated as it may sound once you've done it once or twice, because most of that stuff you can clear well before you have to worry about the trade entry, which is the next thing we're going to look at, right? So when it comes time to make a decision, are you entering this trade or not? What do you need? Well, first, at the trade entry, and remember I told you about that criteria? Here it is written out. If it's a 1 minute chart you're looking at, that would be the first sort of 9:30 to 9:34, right? The first 5 time periods. 2 minute, 9:30 to 9:36, the first 4 time periods roughly, and the 5 minute, the first 3, 9:30 to 9:40. So that answers one of the questions you guys had earlier, okay? So At trade entry, I am going to be looking to identify before I enter, I want to know where my stop is. It's very important, I believe, in any criteria for you to know where your stop is before you hit that button. Don't figure it out after you've bought the shares. Make sure you know where it is before. Make sure that it gives you the right risk to reward. So I'm identifying that stop below the targeted level of support or at the low of the day, right? So I may say, look, I had a targeted level, but maybe, so oftentimes it goes right through it. Levels are rough estimates of areas, right? So if the price had spiked through that a little bit lower, I might put my stop at that low of day. Now, if it spiked lower in a giant wick, I may say, well, that's a really long wick. I might sort of half the distance and not go all the way to the bottom of the wick. It depends on the scenario. But if you want a strict rule, I would say put it just below whatever your targeted level is if the price didn't quite get to the level, or pick that low of day, whatever that number is. That would be your absolute criteria, okay? Next one, confirm that orders exist on the ask. I'd mentioned this earlier, right? I want to see that they're still there. Remember when we had the previous step, I was telling you, check, see if there's orders there. Make sure there's a little bit of an order book. When you're about to enter, make sure they haven't disappeared, because sometimes those orders go in and they get pulled off quickly. That could be a sign that there's a change of attitude, right? And they're thinking, well, maybe it's not going higher. They're going to pull their orders and wait for another opportunity. That would weaken the stock's ability to move higher. So make sure those orders on the ask still exist. Like I said, you want it to be rising. Confirm that the price found that support level and is starting to rise. It doesn't have to go far, but you want it to have started to rise so that you have confidence on where you're putting that stop. And like earlier when I said you want to make sure you've got a 2-to-1 risk ratio, reconfirm it. Notice that most of these actions are sort of reconfirming things, right? You checked out earlier the ask levels, make sure they're there. You want to make sure that that price support that you identified, did it actually adhere to it or did it bust through it, right? You've got to make quick decisions, but you're not finding new data. You're just validating the data you were already looking for. And then reconfirming, does my risk reward ratio still work? Yeah, it does. Guys, and I know there's a lot of stuff. I'm going to take all of this and put it into a very quick example for you in just a minute or two, okay? All right, and then of course, you just take the trade, right? Super simple. That's all you need to do. Take the trade. When you take the trade, the next thing you need to do at trade entry, of course, is to set your stop. Now, some people like to have mental stops. Others like to do, tool-based stops. I would highly recommend an automated stop. That's up to you. We're not going to be getting into using hotkeys and setting your stop automatically. There's tools to do that, but if you know where it is, you know what you should do. Don't ever let yourself go past your stop. That should be a cardinal rule. I don't care what strategy you're trading. And as people are saying, you guys know me, you're saying take the damn trade. Absolutely, right? Take the trade. That's step 4. So you're in the trade. What now? Well, now you need to manage it, right? And managing a trade tends to go one of two ways, doesn't it? And anybody who's traded even once knows what that looks like. It either fails or it succeeds. Now, I'm defining failure here as it's a red trade. Not all red trades are necessarily failures. You could execute this strategy perfectly and it still might not work. But for the sake of direct language so that you understand what I'm talking about, if it doesn't work, if it starts to go red on you and you're losing money, right? Your action is simple. What do you need to do to manage this trade? You stop out at the loss that you'd already determined. Period. Full stop. Literally full stop. Full stop at your predetermined stop loss. You're done. The trade's over. It didn't work. No worries. Did you follow your rules? Good. That's a good example of a fallen angel strategy that just didn't work. That's okay. They happen. If the trade succeeds, meaning it starts to go green and you're seeing success on it, what do you do? Well, remember earlier I said you should identify levels where you think it's going to achieve. You're just waiting for them to come and play. You're waiting for it to hit the levels. Once it gets to the first target level you'd identified, well, you take a 50% partial at your profit target. Then you immediately move your stop loss to break even. Next, right? Where's your next target? It should be another one that's higher than that. You're looking for another 50% partial at your next higher target. Or if the stock starts to move sideways or just starts to chop up and down, this happens, it happens a lot. I would say if it's still doing that in 5 time periods, keep in mind, this is all based on whatever chart time frame you're using. If you're using a 2-minute chart, you're going to be looking at longer time duration, right, than if you're looking at a 1-minute chart. If it's a 1-minute chart, this would mean if in 5 minutes it's still moving sideways, take another partial. On a 2-minute chart, it would be 10 minutes. On a 5-minute chart, it would be about 25 minutes, right? Because the bigger the candles, the bigger the time frame of your chart, the longer you've got to give it to have it sort of take, to work. I would then you update your break even stop for the remaining shares. You don't move it, right? You're going to keep your stop at break even, but being that you took a second partial, you should update it. Now, again, I have tools like you might have that automatically do this. You don't have to do anything exceptional, but if not, you want to make sure that you're not going to get stopped out for more shares than you actually have, right? So you update your stop to break even, and then you repeat the top 2 steps twice more, right? What's the next level? Move your stop or update your stop number of shares if you're not stopped out, because of course it could go hit your target and then go down and stop you out. Last but not least, I'm suggesting you exit the remaining shares at your final target, again, if you're not stopped out. So basically, I'm suggesting to trade this effectively, right, you're only trading it 4 times, right? The first time you take off 50%, the second time 25%, the next time 12.5%, the fourth time you're taking off 6.25%. That will leave you with 6.25% of your original shares. There's no point going smaller, just exit. Now, those are rough numbers. And the big caveat, you guys can question me. I'm expecting a lot of, questions on this because people always ask, do I have to take a 50% partial? Do you recommend that? I'm giving you rules that you could follow. These are great beginner rules if you're starting a strategy. As you mature in using a strategy, you might want to change your trade management criteria. That's fine. That's on you. Your first partial, you might want to be smaller or bigger. You might decide to go all out at that level, right? Thor works on a strategy that way. I like to take smaller shares early and take more shares later. I'm trying to hold more for the bigger gain. But as a general rule of thumb, if you're just starting on a strategy, follow these rules. 50% to 50% of your remaining shares. I want to be clear on that. So if you take 100 shares, you're taking off 50, right? You should have a button that does that, or if you're manually calculating it, you've got 50 left. The next partial, you're taking 25 shares off. You've now got 25 left. The next partial, you're probably taking 13 shares off because you can't take 12.5. So it's going to leave you with 12. The next partial, you're going to take 6. See what I'm getting at? Right? That's how it works. And if you're using smaller share sizes, don't worry about it. If you're using larger share sizes, do the math. Okay? So, those are the rules. Those are the 5 steps, right? It's that straightforward. So a couple of questions here. Are we trying to see if we can achieve at least 2-to-1 win-loss ratio? Yes, absolutely, Michelle. Yeah, on this trade, the way I've defined it and set it up, you should not be partialing at all until you have at least 2-to-1. That should be your first partial range minimum. If it doesn't get there, then you may just be stopped out for a full loss. Is the sheets somewhere to download? Wolf, I'm not. If you're asking about the presentation, I don't have it available at this point, but I could make it available. It's not a problem. And Shay, you're asking, instead of stocks, can I buy calls? Sure. You don't have to buy stocks. You could do that if you prefer. Just know, you'll be looking for the same setup, and you generally be looking for it on the stock chart because, you can't do it off of, you can't do it off of an options chain. You're going to need to do it based on the price movement of the stock. Obviously, your criteria is going to be slightly different because you're going to be looking at the price of the calls rather than the price of the stock, but you need that price movement of the stock to create value in the calls. But there's no reason why you couldn't do that. Right? So the example I was going to run you through, because again, it can be tough, right, when you're just looking at that to know what is it that I should actually be doing, and so I thought let's just take you through a very quick example. This should just take a couple of minutes. and we'll show you what you're looking for, right? So let's go back to the beginning. Remember we said we're going to look at Oracle. I've called it up. I've got it on the screen here for you. You can see those things we already look for, right? So okay, so it's got the float I mentioned. It's already high enough. It's got the ATR. It's $14. That's good. The short float is 1%. It trades 20 million shares a day. Those are some of my base criteria. Now, on September 19th, it had news. Now, I can go to the news here in Trading Terminal, and there's so much news in Oracle. We keep 7 pages of news. Oracle's one of those stocks like Apple and AMD and a bunch of those, where there's so much news, it scrolls off every couple of days. So you're not going to find it here, right? The last news is 2 days ago. Pretty much all news feeds sort of stop. However, I can tell you on September 19th, the news that Oracle had was that it was reported they were in talks with Meta for a multi-year cloud computing AI infrastructure deal worth approximately $20 billion. That's billion with a B. So, a big deal, right? That's great news. That's good tradable news. That's the type of thing I'm looking for. So, let's go into the replay mode here in Trading Terminal. And we've got Oracle. We've got it here on the screen. Let me call it up for the day in question. So we're going to pretend like we were trading this on the day. And we're talking about the 19th of September. So I'm just going to call up the day. And the way Trading Terminal, by the way, loads this for you is it puts you pretty much right at 9:30, right at the market open. That's good. Nothing's moving yet, right? We can just watch it and see what it's going to do. So let's do some of the setup I was talking about, because you could do this anytime prior to the market. So I need to find levels. Where do I think this thing would move to? By the way, when I go to the stock, this is the stuff I look for. The big blue line is the VWAP. The dotted lines you see on here are the previous day closes for each day. This will come into play in a second. But what I'm looking for is levels. So let's start with levels. I'm going to expand my chart. Let's look at a 60-minute chart. And I want to see where did this thing, have levels over the last few days. And if I'm looking at this, I'm like, wow, like this thing really, if I look down here yesterday, look at how many times this thing wicked down and then stopped. That's crazy. I'm going to zoom in again to the 5-minute chart here in Oracle. I want to look at to see what happened here in the previous couple of days. And I can see that yesterday, wow, this level right here, so keep in mind the gray part is after hours, before or after hours. The white is during the trading day. Oh, sorry guys, I'm scrolling all over the place. And I can see yesterday, let me try and, I want to zoom in on this section here. It looks to me like this area of roughly 97.50, let's call it, right around here, 97.50. Look at how many times it looks like it sort of bounced off this. What that tells me is a lot of shares were traded in that area during the market trading hours. So I want to put a level there. I think that could be important today because it was important yesterday. If I scroll back, look at the day before. It looks like that level also had some importance. Not as important 2 days ago as it was yesterday, but it still had some support there. All right, that's interesting. Holy cow, look, I go back to the 15th. Right, the 16th, well, it was trading above that price. It wasn't in play. But the 15th, it also used that same level that I just said at 297.50. All right, so I've got a level now. So remember, the stock right now at this present time, right before the market open, is trading at $299. But I'm saying I think I now know where I'd like it to move to. Right, I've got a target area. This is my level of support. This is what I think I'm looking for. I don't know what the stock's going to do, but that's an area. Okay, so what about the top side? Where do I think it can go to? Well, the high of, if I go back here, the high of like 3 days ago on the 16th was way up here at $320. Well, that's a lot. That's like $20 above the current price. It's possible, but not likely it'll go up there. I think I might want something closer into the price action. So if I look at yesterday, look at yesterday's high of day. Yesterday's high of day was about 301.50. And I'm thinking, that's an area I'm going to keep an eye on for the top side. And, but that's just that one area. I see up here at 305, I'm liking this area at 305 because let me set it and you'll see what I mean here. If I try and put this at 305, Pre-market yesterday, it used that level as a high. And pre-market the day before, it actually used that as a low. Interestingly, it then moved quickly through that, traded below it, and came back up to that level at the close. I'm thinking that is a level where if we're going to get resistance, we might get it at 305. So now I've got two target levels above the active price, 301.50 and 305. All right, so I know what I think I'm looking to do. The stock meets my criteria. I've got an area where I think I want to stop. I've got areas that I can get a target to. Now, we're right before the open. So guys, this is all sort of the mental gymnastics I'm going through when I'm watching a trade. Obviously, I'm doing this in real time and the market's moving, but I have multiple minutes, right? I don't have to do it right at 9:29. I'm doing it sort of as the morning evolves and on a couple of stocks usually, because I'm trying to find one that will meet my criteria, because I can usually only pay attention to one at the open. But what I'm thinking right now is if I can get an entry somewhere around this 299 level, with a stop at at 297.50, that's about $1.50 stop loss, right? And that would mean I need for my 2-to-1 about $3. So I'd want it to go up to 302. Well, that's a little bit above that area that I had targeted, right? Where I think it might get some resistance because it had been there before. But it's well below the 305. So I'm in a not quite a comfortable zone. I can get the 2-to-1. It's really going to depend on my entry and what the price action looks like. You know, it's sort of a judgment call. Would you want to take it based on that or not? Well, I should be able to get my 2-to-1, but it's not as comfortable as I'd like. But what's good is I didn't find any levels that are in the middle here, right? There's no levels that I really have to worry about. Even the $300 price, which is a big whole dollar number, the price didn't seem to hang around there very much, right? When I was looking at the previous days. So I'm not really worried about it. All right. So now we can get into the trade. Let's actually run this thing. We'll run it sort of real time, if you will, just to take a look. So let's start the market. Off we go, right? Time's a ticking now. You can see the clock up here in the top right where the market's open. The bell rings. Now, you know, and I want to see the price action. Now, we're going to have to maybe speed this up a little bit. Let me just put an accelerator on here. And, oh, by the way, the one thing I didn't mention is I'm looking to take a $100 risk. So if my stop is $1.50 and I can take a $100 risk, that means I could probably take about 70 shares, right? 100 divided by 150. I think it comes out to like 66. But let's, for the sake of argument, say 70 shares. So I like to pre-populate things or say I'm looking for 70 shares. Now you can also have a tool that where if I pick my stop level, which would be around this 297.50, I could just put that in, and then I just wait and hit the button and it'll automatically calculate the number of shares. But I need to see what the stock is going to do. And it's happily churning away, right, at double time here. So, all right, so I saw it move down a little bit. It moved up. You know, it hasn't gone crazy yet, but it's moving in a range. That's okay. I'm wanting to see what happens. Again, I want to know that this thing is pulled back. It shows me that if there are sellers who had, remember, this thing is gapping up compared to yesterday's close, there could be people that say, well, now that the market's open, let me sell my shares because I'm in a profit position. I want to know that there's not that many of them and that they've had a chance to get out. Get out of my way, right? Now, if this thing takes off without me, I might lose my opportunity because my risk reward is not that good. Remember I said it's already a little tenuous at a 299 entry. I certainly don't want it to be up at 300 or above, right? If it just goes without me, then it goes and I don't have a trade. But I'm just watching it, and I'm watching it do this stuff, and I'm watching it bounce around, and I'm thinking, you know what? It's come down here. It's set these levels. It hasn't got to the 297.50, but it's tested this level, and it's showing a little bit of higher lows. So I think if I leave my stop there, and I can get a good entry at around the 299, this feels like, you know, the type of trade that I want to take. So I'm going to do my best to get an entry. Let me do it right there. I'm going to get an entry at what did I actually get filled at? You can see it here, 299.12. So I didn't quite hit my target, but I got in at 299.12 because I saw it holding this level. I saw it come down and test. It didn't go right to my level, but that's okay. It tested a 298 area multiple times. All right, so that was my pullback. Now I'm looking for it to move higher. And I'm willing to risk it going lower, right? Going lower below my stop, because it might, like right now. See, it's going and it's testing that level. And I'm like, oh, geez, you know, did I take a bad trade? Well, not. Remember I said, you either put your stop at the low of day or slightly below the level, because I know my level's approximate. And And, you know, like the thing is going to go test. It tested, but look how quickly it was down there and back up again. That tells me I perhaps have identified that level properly, right? Could I have got a better entry? Maybe, but I also might have cost myself the opportunity for the trade. That's always the trade-off, right? So, Arensa, you're asking the pre-market levels are not that important. I prefer to, there's so much more volume that trades during the market hours, 9:30 to 4, that I will weight that a lot more heavily, but I will pay attention to the pre-market trading, especially if it's like this morning's trading, because I know that just happened, right? And those people have either bought and are holding or have sold shares, right? So it puts them more in play than other days aftermarket or pre-market stuff. All right, so this stock has moved up. I'm in a little bit of a profit position. You can see my unrealized P&L here is about $160, $170. Remember, I'm looking for the 2 to 1. I knew that this was a tentative area, the 103.50. So look, oh, it hit 102. Maybe I want to take half my shares off because that's my 2 to 1. Let me do that. I'm going to take half off right there. And I got a pretty good fill. I actually got filled, I don't know where I got filled, but I've now got... It looks like I got filled at, wow, pretty good, 302.80 or so. So remember, so that was my first level, and it popped up through it. I gave it a second, and it gave me a little bit more. That's great. So that's my first partial. Now my second partial, I've got 35 shares left, so I'm going to take, what, 18, right? Slightly more than half off at the next level. And it's the 305 that I talked about earlier. All right, let me sell right there, right? So I'm at 305. Why do I do that? Why do I set those levels and I take half off? Why is it a good place to start? Well, look at my realized P&L, right? Now, with having sold 3/4 of my shares, I still have a quarter left to play with, but having sold 3/4 of my shares, I've secured my 2 to 1 return. Pretty easy. It always looks easy when you get to do it in hindsight, right? But notice what I did, see, and you're right. I did in this case trade on the 5th candle. So 1, 2, 3, 4, 5, right? But look at the candle I traded, 9:34, right? It's the 5th candle of the day at 9:34. That's sort of the outside range of what I said my criteria was, but it was within my criteria. So now what you do is you've got a decision to make as a trader, right? By the way, after I took those partials, my stop automatically moved to break even. So if it came back down, right, to my entry level, stop out, that's going to be automatic. But I've got to decide what I'm going to do, right? And usually what happens when you get into a trade, this is when things, you know, can take longer. And you need to make a decision. How long do you wait? You know, I can't, like, it depends on your patience, how long you want to be in the market. You may look and say, well, look, if now the VWAP is actually above your average price, which it is right now, so I'm gonna move my stop. If it moves down to the VWAP, I'll get out. Or you say, well, we previously thought that 301.50 area was significant. So if it comes back and tests it and fails, I might take my shares off then and just put my money in my pocket. Or you might want to wait for a bigger move. Remember, we had identified that $320 range? Who knows? Maybe you can get there. But the likelihood, based on how it's moving so far, it's going to be a while. So you need to make a call as you want to do, as you want based on your criteria. Rich, you're asking, do you ever add with this pullback? So that's completely based on, again, your trade management rules. For this, to keep it simple, no. It's a very different sort of strategy add-on and another level of complexity to add to a trade. You need to know, are you adding in a place where it's likely to bounce? Is it going to move higher? You know, I'm not a great adder, to be honest. When I add, often I do it too soon, and I cost myself the opportunity, because what it does is it moves my average price to a level that's not technically significant, and I usually just end up getting stopped out. So I am not great at adding to a stock. I don't usually do it. So, look, not to ruin the story for you, but bottom line, this stock, now, like, we're now roughly almost half an hour into the day. I'm running this at 10 times speed. But, if we jump ahead, let me just jump ahead here about an hour. And you can see, right? Look what happens. This thing is moving sideways. It's moving on that VWAP I talked about. You might just say, look, enough is enough. Let me get out of this thing. I've made my money. It's good. I don't want to hold on to it. That's okay. That's a decision you're making, right? Maybe it's just to free up mental capacity. I don't want to worry about it. You could also say, hey, it's done nothing wrong. Hasn't broken the VWAP. Hasn't come back to my entry. Why not, just let it go. Let's see what it can do. It's completely up to you, right? I personally, because I trade all day, I'm happy to leave it. I'll let it run. Let's see what happens. Right? You may say, I don't have time for this. Right? Let me out. I got things to go do. So, I would say you got to pay attention. You got to dynamically assess the trade based on what you're seeing. And let's jump ahead another couple of hours. Another couple of hours later, right? If I'm looking at this, look, it hasn't done anything. A few hours later, Oracle's still. It did go below VWAP, right? Over here at 11 o'clock, but it never quite hit my entry. It came really close though, let me tell you. Right down here in this candle, it came within like 30 cents of my entry, right? But, if you really want, you can keep holding. What time are we at now? We're at 1 o'clock in the afternoon. Let's jump to 3 o'clock in the afternoon. Your patience can sometimes be rewarded. Because if I was to wait this out all day, sorry, it's 2:51. Let's move ahead even more. You'll see that eventually this thing will go up to, I think the high of the day was, it was about 307. I think it even goes higher to 311. But, you're waiting all day on this. But my point is, this is the type of trade you can take, where you're either just in for the open and then you're done. You could have been done happily, take your money off, or you can wait all day like this and try and pocket a few extra dollars. Notice the difference for me was like $40 when it was here compared to $115 up here. So was it really worth waiting all day for $60, $70? Your call. You make the decision. Let's get out of it right now and just say, you know what? I'm done. What a great day. Oops. Look what I've done. I'm now short by 1 share. All right, let's get out of that. See, I didn't look at my size properly. So here's my realized P&L, $366. Oh, look at that. There's a pop higher. So right before the close, it popped higher. I thought it went up to 311 at some point, but anyways. So there you go. On this one trade, I just made $366, right? Relatively straightforward, but that's how I like my trades to be. Simple, structured. I know what I'm looking for. And by the way, if any of the criteria I was looking at didn't pan out, abort. You're out. There would have been no trade. Look for another opportunity. I usually only get to look at one of these per day. So if Oracle hadn't worked on this day and that's what I'd chosen to watch, I do not have a fallen angel trade for that day. Live to fight another day. Look for another opportunity. So that's the trade strategy. If you want to look at another example, PRAX from today, I only put it on there because it happened today. I'll tell you right now, it did not meet my criteria. Its float is too low. Its short float is, well, it actually does meet the criteria, but barely. Its average shares per day is too low. I think its ATR is too low. There's a lot of stuff that doesn't work. So, but it's another one that sort of works in the style, even if I don't like the stock itself. All right. So hopefully that gives you an idea of how you can trade this. And I appreciate you guys taking the time being here. I'm going to stick around and answer a few questions if you guys still have them, but we're going to close the recording for now. Thank you for being part of Trading Terminal and joining us here. It's always great to have everyone.